Welcome to today's What Moved the Market show. I'm your host Prem. It's Monday, December 1st, 2025, and here is everything you need to know as the markets close for today. Indian equities kicked off December with a classic euphoria at the open, fatigue at the close kind of session. After hitting fresh lifetime highs in early trade, both frontline indices cooled off into the red by the bell. The Nifty 50 ended the day just under the 26,200 mark, around 26,175, down about 0.1%, while the Sensex slipped to roughly 85,642, lower by about 0.08%. The Bank Nifty was the story of the morning, opening above the psychologically important 60,000 mark for the first time ever, and printing a new all-time high near 60,114, before giving up those gains to finish closer to 59,681, down around 0.12%, as profit-taking set in. So the mood by the close was one of cautious consolidation rather than panic. The trend is still up, but the market clearly showed it is not willing to chase highs relentlessly at these stretched levels. The big macro driver under the surface continues to be growth versus currency. On the one hand, investors are still cheering that strong second quarter GDP print of about 8.2%, the fastest in 6 quarters, which reinforces the narrative of India as one of the world's standout growth stories and underpins the case for domestic cyclicals, financials, and infrastructure plays. On the other hand, persistent foreign selling, a softer global risk mood in pockets, and a relentlessly weak rupee kept traders on a tight leash and triggered profit booking whenever indices ventured too far into uncharted territory. Breadth was mixed. Large caps were flat to slightly negative overall, mid caps showed pockets of strength, and small caps saw selective buying but not the kind of froth seen in earlier months. On the currency side, the rupee remained the headline macro worry for Dalal Street. As of the latest available data, the rupee was hovering around an all-time weak zone near 89.6 to the US dollar, with reference rates placing the USD INR close near 89.58. Sector-wise leadership today was quite clear. Metal sat at the top of the pack, with the metal index clocking gains as global commodity prices found support from OPEC, plus reiterating its decision to pause production hikes in the first quarter, and from expectations that global central banks, including the US Federal Reserve, are inching toward a more accommodative stance. Domestic demand indicators for steel and base metals remain healthy, and that combination kept buying interest strong in names like JSW Steel and Hindustan Zinc. On the other side, realty stocks bore the brunt of profit-taking, with the realty index underperforming as traders pared exposure to high beta, rate-sensitive counters ahead of the RBI meeting, and in light of the rupee-driven macro jitters. Pharma and select consumer staples also lagged, reflecting both valuation fatigue and some rotation into cyclicals. Financials were somewhat split. Frontline banks outperformed, especially PSU and select private banks. But NBFCs and high-valuation lenders like Bajaj Finance saw corrective moves as traders trimmed risk. Turning to commodities, the cross-asset signals today were broadly supportive but nuanced. Crude oil in rupee terms hovered around 5,331 rupees per barrel in the domestic market as of the latest available data, essentially flat to marginally higher over recent sessions. Globally, Brent crude held above the low 60s in dollar terms after OPEC Plus confirmed it would stick to its plan to pause production increases through the first quarter, even as markets balanced that with concerns about a potential supply surplus next year and ongoing geopolitical tensions. For equities, that meant upstream names like ONGC and other oil producers found some support, while oil marketing companies and airlines continued to face an overhang from firm input costs and a weak rupee. In precious metals, gold and silver remained a big talking point. MCX gold futures were trading around 1,30,700 rupees per 10 grams during the session, up roughly between 0.5% and 1%, and hovering near multi-week highs, helped by a weaker rupee and bets on global rate cuts in the months ahead. Silver was the star, with MCX silver futures near 1,77,000 to 1,78,000 rupees per kilogram, and having touched an intraday high close to 1,78,600, effectively flirting with record territory as of the latest available data. That powerful outperformance of silver over gold in recent weeks has implications for sectors like autos, renewables, and electronics that are heavy users of silver in industrial applications, and it also keeps the spotlight on jewelry and bullion-related stocks. Zooming out to the geopolitical canvas, global markets today were still navigating a complex mix of risks and supports. Oil traders were digesting the latest OPEC Plus communication confirming that production increases will be paused in the early part of next year, against a backdrop of lingering tensions in the Middle East and fresh uncertainty around Venezuela, after tougher rhetoric and sanctions talk from the United States. Sanctions and supply disruptions involving Russian oil companies have also played into occasional spikes in crude over the past month, even as the broader demand outlook looks more subdued heading into 2026. Looking ahead to tomorrow's session from a technical standpoint, the Nifty 50 enters the day with a mildly bullish but clearly fatigued structure. As long as the index holds above the 26,000 zone on a closing basis, the broader trend stays positive, and traders are likely to continue treating intraday dips toward that area as buying opportunities. To wrap it all into one actionable takeaway for tomorrow, given that the market is juggling record index levels, a record weak rupee, and a pivotal RBI meeting, the smarter approach for traders now is selective aggression with clear respect for key levels. That's it for today's close. If you have questions about specific stocks, sectors, or trading strategies in this kind of currency-driven, regulation-heavy environment, send them in and they can be featured in upcoming episodes. Stay tuned for tomorrow morning's wrap and send in your questions.